Today, we're looking at the enhanced volatility that we've seen come back into the marketplace over the last few days and what that means going forward. So let's start by looking at this table, which we talk about a lot, which tracks all the 1% moves, both up and down, since the beginning of 2022. So most recently now in October, we've had four, right? Two 1% declines, two 1% gains. We haven't had more than five in a calendar month since March when there was 11. And we had this highlighted because January, February, and March of this year really replicated what we saw in 2022 when we had, say an average of 10, 12, or 13 at a time. And of course, this coincided with the bear market. And even after the low was in, it was a lot of two-way volatility, which just made trusting any of these moves very difficult. And of course, that extended into the beginning of this year. And after the March lows, when things really changed. And again, that's when the uptrend started to really take hold and exhibit traits that we typically see in uptrending markets, right? Lower volatility, breakouts working, so forth and so on. So if that's about the change, we'll see reflected here as this number continues to tick up. Again, we haven't seen that, even though it's been a little bit tough waters recently. And so looking at now all the 1% declines going back again to the beginning of the second quarter, this is the first ones you've seen now in the last 10 trading days. And so needless to say, the more 1% declines we see at a time, the bigger the cluster is, the more challenging the environment comes and just leads to downtrending action, right? And surprise, surprise, when we do not have a lot of 1% declines, the market tends to do well, right? Typically don't have a lot of 1% gains at the same time either. But as we discussed last video, the point is to have a fewer amount of both, but more 1% gains versus 1% losses, right? And so now it's very important to compare what we've been doing recently during this October advance compared to what happened from August to September, because so far there are many traits that are similar, right? 4.3% from the low so far compared to 4.8% back here. And so what happened after this? Well, we had a pretty big downturn, saw a bid, but again, lower high. And so this is really what's been the case here. We've had some now two pretty strong counter trend moves, both of them so far producing lower highs. We can probably put some lines around here, make it appear inside of a channel as well. So that really needs to change going forward. If not, then of course, buyers will lose interest and we could see a repeat of more downside action after that. Now, one of the biggest differences, of course, is that this one right now in October is occurring in a month that typically sees a bottom and then, of course, gives way to a big fourth quarter rally. This, again, is looking at the average 20-year track of what on a seasonality basis. Whereas in September, as we know, typically not the best, and we do see a top here with a rollover. And of course, that's what's happened again. Now, we don't recommend relying on seasonality alone. At the same time, we have to, take into account all different factors that weigh on investors' minds, and this is definitely one of them. And so, again, from a pattern perspective, very important again to hold relatively soon, because now this bullish pattern is coming under pressure, right? Still within reason if we see a quick bounce right now, but another 1 or 2 days of downward sloping action, this will be negated, and it's going to make this topping pattern, again, much more of a risk of actually breaking lower. Now, it's the third time we've seen iteration of this topping formation already. Back in August, it was close, never broke. In September, we did get the break, of course, and about 3 weeks worth of downside action before the rally came, and now potentially again in October. So we can see how this could work out, right? It's very identifiable. People see it, and we know there's not much below the most recent lows to stop it. However, this, of course, we've seen before, right? This is arguably the fourth bearish pattern we've seen materialize since the October 2022 low, right? And sometimes we haven't even seen a downside break, like in December into January of this year. Again, we saw a marginal break in March, held that trend line, didn't see the break in August. Then again in September, saw again demand come in near that trend line. Here we are again, right? And so it hasn't been consistent, like the most consistent uptrends like we've seen in most recent times, 2021, 19, 17, 13, right? However, the bid has come in when it has supposed to, and has kept these much bigger patterns from breaking lower. And so that's important as well, because we are, again, trying to make this bottom information, this potential cup and handle pattern, do better than what we saw back here, again, August, September, where even with this downturn, the comeback looked like it was about to break out. We talked about this last time, but it's very important to see, because if we go down much lower where we are, then this structure won't be viable as much, and we'll have to take some more time to rebuild it. That's what we have for today. Check out these other videos and subscribe, and talk to you next time. Thank you.